Hello and welcome back to the Failed Breakdown channel. It's been a couple of days since I've done one of these trade recaps, but I think today was a nice clean example to go through. This is going to be from Thursday the 18th of December. Right after midday, we put in a nice failed breakdown of the 68.21 level. I'll also touch on a little bit of the action from the previous days, just swing through that real quick. I won't go into detail. As ever, I'm not a professional, I'm not an expert. I'm just doing my best to convey the method taught by Adam Mancini. So I would highly recommend everyone just follow his newsletter and learn everything you can from him rather than me. But with that said, let's get into the charts. Okay, so real quick on the 4 hour. So yesterday we lost the megaphone support and we've been kind of trending down ever since last Thursday when we put a failed breakout at the top of the megaphone or just tested it, and then we've been working our way down in this blue dotted channel ever since then. On Tuesday we put in a significant low here at 68.17, but on Wednesday yesterday I think we triggered the bear case. I want to say it was around 68.30, maybe 32, and then the final sort of line in the sand for bulls was to put in a failed breakdown or to hold the 68.17. They weren't able to do that. We elevated down and then went into a major consolidation for the rest of the day and into the evening. Last night about what time was it? 11:30, I think. Put in a nice failed breakdown of the bottom of the consolidation we'd been in here. About, what was it, 67, 82 or 83, I think, and then ran up into CPI today. Good CPI report and pushed on higher at that point. I missed the trade last night, watched it, but didn't feel like engaging from the comfort of my bed, so was flat going into the morning session. And then CPI, after that, obviously we lifted more, so still remained flat, but no worries, just have to wait for the scary elevated down flush, which happened around midday, and presented us with a nice clean, what I would consider to be a textbook setup. So let's look at the lower time frame to go over that, and then we'll get into the replay of the actual execution. So just real quick on yesterday. Touch the top of the channel. Looked like we might be setting up to put in a failed breakdown of Tuesday's low here at 68.17 or so. I want to say from memory it got a few points above that, but wasn't able to hold for a significant period of time. And with that, we needed to be a little bit more patient with the non-acceptance protocol to make sure it held above there, and it never did. And then just continued, failed downwards, and then got into this chop. And really down here, there was absolutely nothing to engage. It looked like it was going to recover this 67.95 multiple times. But whenever we get this elevated down sell like this, Adam is always tweeting something to the effect of, wait for or resumes up when such and such level reclaims. I think it was 68.18, the prior day's low. So he was just saying, you don't really need to try and catch the bottom of this. Just wait for that level to reclaim and get back in there. We don't need to try and pick the bottom because it can easily dip another 100 points from here. We just don't know. So there's always, no rush to try and get in here. But this was the nice entry right around, this is Central Time on my computer, but right around 11 o'clock money time. The nice thing about this, finally broke down the 60, 67, 82, 83 was a clear shelf that we've been bouncing off of for multiple hours, so met the definition of a significant low. We'd obviously had this quick wick below on the close and another one here, but the shelf was really 68, 67, 83-ish, and we'd been bouncing between 83 and 93 for hours. So when we put in this dramatic flush and then bounced straight back, there was a little bit of type 2 acceptance in here. And I know some in the Discord were able to catch this little move. So this was that swing of type 2 acceptance, and you can kind of see here the price movement has really cleaned up quite dramatically compared to all the mess in here, which is just untradeable. So yeah, that was a nice move pre CPI. CPI hits and then lifts off here, and the overnight high kind of coincided with the scene of the crime, as far as when that data was dropped, and that would be an important level later on, as we will see. So this is the level it held. So we know we have 68.18 and 68.22 were kind of a zone to look for a strength add. Obviously we had that during CPI, the CPI push up right here, back tested it and then lifted off. Personally, I don't like these back tests. I never trade them. I don't do very well with them, but there was a back test trade in there. But what that did was it set a significant low at a significant level, so a clear zone to look to trade off. We also had the 25 up here, which was just a noteworthy low to watch out for, and if you wanted to wait for confirmation, you could wait for that 68.25 to reclaim to get long there. So let me switch over to the chart. You can see the nice scary flush here. We've dropped 40-50 points through the level, bounced beautifully off the overnight high. That was kind of the line in the sand for me, as far as like, if we had dipped below that, I would have sort of stood down from the trade and maybe looked for something else, or at least kind of slowed down on my alertness. But it held perfectly there. We put in a swing of acceptance and then accelerated back up through the level. So let's take a look at that in real time. Okay, so here we are. It's 12:15 in replay mode here. I'm going to run it at about double speed. So obviously the scary flush or elevator down is in full effect at this point. And kind of this is right around the time at which it should be on alert, watching to see if we get a sweep of one of these significant lows and then the subsequent reclaim, or if we're just going to maybe bounce on a straight back test or carry on lower. So those are kind of the three options, and obviously what we're looking for is the sweep and the reclaim. So the key zone from the newsletter was 18 to 22, but we had the most recent structure here at 20.5, which was the low right off the open, and then the additional one swing low at 25. So I was kind of monitoring those levels to be to be more accurate, rather than just looking at that 4-point zone. But for me, kind of depending on how it was going to set up, I was looking to maybe get in above 25, but as it turned out, I took a bit of a lower entry after kind of liking how the acceptance looked. So not much to do at this point, just driving on through at good speed, getting quite a bit of volume coming in on the tape. Let's see, yeah, we've dropped 40 points in the better part of 25 minutes, so well over a point a minute. Nice scary flush. Kind of, for me, I like to look at gradient to try and gauge that, and that's one of the things I'm trying to incorporate as far as a potential invalidation, as in, if it isn't at least 3/4 of a point per minute, then maybe we were just lazily drifting through a level and it isn't enough to get me interested. So great volume coming in still. So this is where we start to think we've had a sweep of the low that we're interested in by about 6 points. So a shallow flush at this point. So we're not expecting to see type 1 acceptance. We're pushing up through the level here without any sort of swings of acceptance yet. So what we're really looking for then are either the non-acceptance protocol or type 2 acceptance. So non-acceptance protocol would look like it pushing up and holding right around or above the 25 level for a few minutes, and then we can potentially long up there. But as we'll see in just a second here, what we really get is type 2 acceptance, where we've recovered the level, and now sellers are going to push again and see what they can make happen. What I liked about this one, for me, I much prefer type 2 acceptance, where it actually loses the level, not necessarily the flush low, but loses the significant low and then recovers it. I mean, there was a little bit of a swing in there, so but what I really like to see, this is a range chart, by the way, what I really like to see is this actually print a down bar for me to consider it to be like a significant swing or a significant rotation down. So some selling activity coming in now. Otherwise, it's just a fairly minor oscillation. That's one of, I think, the tricks with gauging acceptance, is trying to filter out what's noise and what's a proper sell rotation, what is actually the sellers showing their hand. And I don't claim to be an expert at that, but maybe that's a way I like to think about it. See, now here we're starting to print. These are 20 tick range, so each bar represents a 5-point move. So yeah, I would see this now as a decent swing of acceptance of the second type. And here it's okay if it makes a lower low, but what I don't really want to see is it go significantly past this, as in if it loses the next major level, I would be a little bit more like stand down as far as this immediate entry. It doesn't mean to say I wouldn't take it if things developed, but I would certainly back off on looking for an immediate entry. So yeah, with type 2, it is okay if it loses this flush low. You just don't want to see it go too much lower. Like if it went down to the next level and then came back up, I might be looking for another swing of acceptance at that point. But here, if it just comes down and then pushes back up through the level, that for me is valid type 2 acceptance, and we've met all the criteria. We've got a significant low at a significant zone. Adam doesn't talk about that so much these days, but he always used to say that. Kind of one way you can take a significant low and add the plus sign to it. I suppose that's how I think about it, as in, this level, this 20 region was the low day from, from Tuesday. So it's a significant zone, but we're trading the significant low from this morning's session at a significant level. We've got the second piece, which is the scary flush. We're working on acceptance right now, and all we need is that final reclaim, and ideally an increase in momentum as we come up through the level. So right now we can see sellers have played their card. They have made a lower low, but they haven't made significant progress. And now, it's just gone away. But there was, a bit of a buying rotation coming in on the delta. You can see that, but obviously you can see it in price action as well. But little push from sellers here. See the negative 300, but not really getting a huge amount of deterioration in price. And it does just kind of hold here at the level for a couple of minutes before accelerating on up. And that acceleration point, it's hard to catch that, but that is really the ideal entry when you see price start to move. But so yeah, now we've just reclaimed really. I think you just want to give it a couple of minutes to see how price action develops at this point. can't remember the exact time of entry. It wasn't far from now. I kind of chalked it down in my mind as being right at 12:30, which is where we are now, but I seem to remember it moving a little bit sideways here for a couple of minutes before really accelerating. So yeah, this is really what Adam talks about a lot. You know, if there was a lot of supply in this zone right now, it would just push down and go and lose the level. But it dipped a little bit there. That's right where I got in, perhaps a little bit early. I think the optimum entry was maybe a minute later. But did you see that there was a little push there, and I jumped in at that point. It did swing lower a little bit and then make the final push up. So perhaps a little bit early on that one, but I liked the rotations of acceptance we'd had here. So I still think that was a valid entry, despite being perhaps a minute earlier than optimal. So I'm just going to slow it down to 1 times speed here. And this was kind of the final moments before it pushed. I'm just keeping an eye on the ticks here. The speed of the tape, that's what this is really showing. And then the aggression. So you see sellers coming in a little bit more. But what I want to see with that is, sellers make a push, but then price not react, correspondingly. Obviously if you see aggressive selling in, all things being equal, then you would expect to see price fall. But it doesn't, so sellers have played their hand at this point. And right here, see that volume ticking up to the thousands. Delta coming in. And that was the move right there through the 25. So I think if you'd waited for 25 to reclaim there, that was probably the perfect entry. And then see the volume maintaining pretty high, and it runs quite quickly up to 68.50 from this point. So I would consider that to be a fairly textbook trade. I'm looking forward to seeing what Adam says about it in the newsletter. I suspect he probably didn't trade it, but most likely because he's in a runner, he's in profit protection mode. And unless that runner is trailed out, which I highly doubt it, he's probably not got involved with this one. However, I do think it met all the criteria. Nice valid entry. It did happen in the middle of the day, which obviously isn't ideal, but I think it's more about the price action and the movement of price rather than time of day. Obviously, there's just a tendency for midday to be a bit choppier. But clearly, we were getting some pretty nice swings here, and some nice movement, so good to engage. Okay, one last thing before I sign off. This is back in present time. Replay mode is off, and I just wanted to mention this because I don't say this enough. But stop goes below the lowest low here. So for me, my entry was around 68.24-ish. Right now my stop is down about 68.08, and so my runner is still active from this. I got my 2 trims, but this whole swing downwards here, even breaking the significant low, kind of backtesting the zone again, my runner is still active from that, and will remain so until it trails out. So one way or another, that runner gets stopped out either by the original stop, but obviously ideally we work our way higher, and there's another low that I can move this stop up to. Another, I usually go with the 15-minute method on 15-minute chart. Obviously we haven't really made a significant low. I suppose I could drag it up underneath the 16 now. But yeah, that's the critical part. Helps you to stay in the trades, control FOMO, and all that good stuff. All right, that's it this time.